In 2022, hackers swiped a staggering $4 billion. Almost 2,000 crypto projects collapsed. Bitcoin, the mighty titan, saw 60% of its value vanish into thin air. Yes, we're revisiting the year that left a deep scar in the world of cryptocurrency. Today's episode is not just about rewinding to that turmoil, but extracting lessons for the future.
Hello and welcome back to Bitcoin Scramble, your go-to source for everything related to the fascinating world of cryptocurrency, brought to you by B2B InPay. Let's plunge into the heart of our topic, the tumultuous ride of cryptocurrency in 2022. Take Bitcoin for example, the undisputed trailblazer of the crypto industry. It took a nosedive, losing a staggering 60% of its value over the year. With prices bouncing around like a ping pong ball, investors experienced a year filled with anxiety, leading to Bitcoin's dramatic plunge from $40,000 in May to $16,000 by December. One of the contributing factors of Bitcoin's value loss was unprecedented market volatility. As 2022 unfolded, these wild price swings started to take a toll on investor confidence. The atmosphere within the crypto community began to shift from one of optimism to a state of rising skepticism. This uncertainty, further amplified by panic-driven sell-offs, led to sharp drops in Bitcoin's value. By the close of the year, Bitcoin was trading at less than half of its peak value. But where did this turbulent wave start? The ignition was the collapse of TerraUSD, a unique type of cryptocurrency called a stablecoin, which was theoretically designed to be immune to the volatility of traditional cryptos. This was achieved by pegging its value to a stable asset, in this case the US dollar. However, the unique characteristic of the TerraUSD was its lack of backing by tangible assets. Instead, it was governed by complex algorithms that were supposed to maintain its price stability. When TerraUSD came crashing down in May 2022, it was akin to a seismic shock in the crypto universe. It wiped out an astronomical $60 billion from its market cap, sending ripples of panic across the entire cryptocurrency market and leading to widespread apprehension and doubt. Investors were left scrambling, raising questions about the robustness of the fundamental mechanisms that underpin other similar cryptocurrencies. This catalyzed a chain reaction, accelerating the decline in investor confidence and eventually contributing to the broader crypto market downturn in 2022.
I think the good news, if there's one good news out of what happened last week, is that kind of events are very painful for the people who suffer the losses of their money through those events, but it's also a way to clean who is there for the wrong reasons and who are the projects who really are there for the long term and try to provide utility through their blockchain and token.
The performance of several other major cryptocurrencies also affected the investors' confidence in 2022. Take Ripple for example, which has been entangled in an arduous legal battle with the US Securities and Exchange Commission for several years. This legal skirmish, along with the ambiguity around its potential outcome, create a cloud of uncertainty among investors, leading to an inevitable dip in Ripple's value, shaking investor confidence in the cryptocurrency and contributing to an overall bearish sentiment in the market.
We do work with law enforcement at Ripple, and we do file suspicious activity reports. And again, we're only working with regulated endpoints, so we're somewhat unique. And I will say, I agree with you that the origins of crypto were absolutely anti-government, anti-bank. Yeah. The origins of these technologies and how these technologies can be used can be very, very different.
On the other hand, Ethereum grappled with its own set of challenges. The network struggled with congestion issues, exacerbating existing scalability problems. The network's slowdown resulted in sluggish transactions and escalating fees, both of which are significant deterrents for investors and users alike. Additionally, the proposed transition to Ethereum 2.0 added to the uncertainty. While this upgrade promises to address the scalability issues, delays and concerns over its successful implementation added to the bearish sentiment. In 2022, regulatory scrutiny of cryptocurrencies intensified globally,
stirring the pot of uncertainty and apprehension among investors.
Big crypto companies are looking to make big profits, are desperate to reach as many Americans as they can, hence the $54 million in ads in the Super Bowl. They brought in celebrities and gimmicks to make crypto sound exciting and daring and profitable, immensely profitable. But these ads left a few things out. They didn't mention the fraud, they didn't mention the scams, they didn't mention the outright theft. The ads didn't point out that you can lose big in crypto's huge price swings.
Take for instance the People's Bank of China, PBOC, which took a sweeping and resolute action against all forms of cryptocurrency transactions within its jurisdiction. This move wasn't solely about banning transactions, it was a strategic maneuver designed to suppress financial risks and maintain the country's monetary sovereignty. This outright prohibition by the PBOC, one of the world's major central banks, had far-reaching implications. It not only dampened market sentiment with China, one of the largest markets for cryptocurrencies, but it also ignited concerns about similar regulatory clampdowns in other countries.
Fraudsters are targeting crypto accounts using technology designed to separate you from your money.
This breach, it comes just a few months after another major hack of the Poly network. And I'm wondering just how worried should investors be who are trying to enter the world of DeFi?
The year 2022 was also marred by chilling cybersecurity breaches in the crypto world, with an unprecedented $3.8 billion snatched away by nefarious hackers. The attacks were not only more frequent, but also more sophisticated and destructive, leading to some of the largest losses in the history of cryptocurrencies. In what could only be described as the perfect storm for security breaches, the Ethereum sidechain known as Ronin was victim to the most significant cyber heist of the year. In March 2022, its network was successfully breached, a digital burglary that saw a staggering $612 million in Ethereum and $25.5 million in USD coin vanish into the digital ether. This rattled the crypto community, further contributing to the loss of investor confidence and fueling the overall crypto downturn in 2022. November 2022 further shook the crypto community when a staggering $5.1 billion in outstanding liabilities were revealed at the FTX cryptocurrency exchange, one of the leading trading platforms at the time. In response, users began to liquidate their holdings en masse, a desperate attempt to salvage their investments with a frenzied 72-hour window. Around $6 billion was hastily withdrawn from the exchange. A booming trend in 2021 was non-fungible tokens or NFTs.
NFT sales are all the rage right now. There's so much enthusiasm, so many people who just want to buy.
This digital asset class, which had seen an astronomical rise of 21,000% in 2021, found itself grappling with an oversaturated market. The oversaturation diluted the perceived value of individual tokens, leading to a drop in demand. The impact on the market was swift and severe. The trading volume of NFTs plummeted dramatically by 97% in 2022, falling from $17.6 billion a year ago to a mere $466 million. So, how did all these incidents shape the future of cryptocurrency? The chaos of 2022 not only weeded out weak projects, but also paved the way for a more cautious, regulated and secure future in cryptocurrency. Investors now tread more carefully, while the industry adapts to increased scrutiny and enhanced security measures. Remember, every setback is a setup for a comeback. And with the resilience and innovation that the cryptocurrency space is known for, we look forward to a future that is more stable, transparent and secure. That's it for today's episode. Thanks for watching. Don't forget to subscribe to our channel to stay informed and up to date with Bitcoin Scramble, brought to you by B2B InPay.